Hey guys, today we're talking about an absolute beast of an ETF, the NEOS NASDAQ 100 Income ETF, ticker symbol QQQI. This absolute beast is managed by NEOS Investments and currently yields a mind-boggling 14% annually. But what's even more insane, it pays out monthly, it's tax efficient, and it offers much needed downside protection against the independent. Now, before we dive in, let me tell you why this stuff fires me up. When I was grinding away in the last few years, I was obsessed with finding investments that didn't just grow, but paid me to hold them. I wanted freedom, not just a bigger number in my brokerage. That's why funds like QQQI are game changers. They are the backbone of how I retired at 41 years old, and I'm pumped to share this with you today. If you're new here, my name is Adam, and I retired in 2024 at the age of 41 years old. My retirement is based on a unique three-part approach. The multi-bagger, where you accumulate assets and asset appreciation, the dividend machine, where high-yield, consistent distributions pay for your bills, and the options income strategy, where you accelerate your passive income with selling covered calls and cash-secured puts to help fund your retirement in style. If you want to learn more, stick around and you'll learn how to do exactly what I did and retire early. Before I dive in, let me be absolutely transparent. I do own this ETF. I do believe in this ETF. I still urge you to do your own due diligence and do your own research and use this as a guide as opposed to a must have. At the end of the day, I'm not a financial advisor. I do think that this ETF is a must have for anyone looking for a reliable monthly income. But don't just take my word on it. Let me show you exactly why this is such a powerful investment. I personally make over $2,000 a month on this ETF alone. I literally just got paid $2,307.69 on February 28th. Now, I know what you're thinking. Why did I leave in the 69 cents and not just round up or down? And the answer is simple. Whether you're up or down in the market, everybody loves a good 69. First, let's break down how this bad boy works. QQQI holds all of the NASDAQ 100 stocks. We're talking about Tesla, Google, Amazon, Nvidia, Meta, even Costco and Palantir. All the heavy hitters you want in your portfolio. But here's where it gets interesting. NEOS doesn't just sit on these stocks like a regular index funds. They layer on a genius option strategy that literally prints money every single month. So, what's a covered call for newbies out there? Imagine you own a stock and you agree to sell it at a certain price if it hits that level by a certain date. You get paid a premium upfront for taking that deal. Well, NEOS does this at a scale with the NASDAQ 100 index, picking strike prices that balance income and growth. It's like renting out your portfolio for extra cash. I'll break this down in just a moment. Check this out. They sell covered calls on the NASDAQ 100 index itself, not the QQQ, but the index. And this distinction is very important at what sets it apart from other covered call ETFs like JEPQ and some others. I'll speak more about this shortly, so don't go anywhere. 80% of the fund's AUM, assets under management, is used to hold, while the rest of the 20% of the assets under management is used to sell covered calls. The fund also has the right to use some of the premiums to buy long dated calls, but I'm not aware that they did that yet, to capture more upside in the future if the opportunity shows itself. And an important note, the 20% does not have to be used. It can and usually is, but it can also sit as cash or short term treasuries. Why does this matter? Because it's not just some rigid robot strategy. The team can pivot, cash in a crash, calls in a rally, and that's flexibility. And at the end of the day, you want flexibility. You want to be nimble. As my man Bruce Lee used to say, "Hiya!" Be like water. Just go with the flow. When they sell the covered calls, they usually sell covered calls for 1 to 4% over the existing price of the stock, and they usually sell 6 to 7 weeks out. As they get closer to the 6 or 7 week expiration, they roll the covered call, so on and so forth, rinse and repeat. If you're familiar with any of my strategies, I do this myself in a lot of my stocks, which is part 3 of my personal strategy, options income, to buy those nicer things in life. This fund is an absolute beast, with a management team at NEOS showing diversity, dexterity, and flexibility to maximize our distributions and protect the NAV. Now, let me show you something that will absolutely blow your mind about the distributions. Look at this chart. These payments have been steady as a rock, coming in at around 1.15% every single month. We're not talking about some sketchy dividend that might get cut. This is a systematic income from options, premium, and dividends. Nobody knows what the future holds, but so far, so good. This fund has done absolutely nothing but deliver as promised. But here's where it gets absolutely insane: the tax efficiency. And this, I believe, is the absolute indicator, the absolute distinction between QQQI and, in general, the NEOS funds and other cover call strategies. QQQI uses something called Section 1256 contracts for their option strategy. In simple terms, this means 60% of their gains gets taxed at long-term capital gains rates, while 40% at short-term rates. Compare that to a regular dividend ETF, most of those payouts get taxed as ordinary income, which can hit 37% if you're in a high income bracket. With QQQI, you keep more of your money, and that's huge when you're living off of investments. I did the math, I asked Grok, I asked ChatGPT, and NEO's tax efficient or partial tax efficient 14% distribution is as if they didn't have a tax efficient distribution at around 16 or 17%. So while you're getting 14%, that 1256 rule is as if you're getting 16 or 17% as per a couple of AI programs. Now let's talk a little bit about the management, because this is crucial. NEOS isn't some passive shop just collecting fees. These guys are actively managing this strategy every single day. The fund is managed by NEOS Investment Management LLC, led by portfolio managers Garrett Polella and Troy Cates. I'm sure I'm butchering those names, who brings extensive experience in asset management, trading, and ETF development. Overseeing these fund goals of generating high income with tax efficiency and potentially equity appreciation since its launch in January 2024. Yes, they might charge a 0.68% fee, but I believe that's fair. That's right in the middle, not too high, not too low. And that's literally like $68 a year on a $10,000 investment. But when you're getting 14% yield and tax benefits, that fee is absolutely nothing. And the best part is it's already baked into the 14% you see, so you don't really feel that 0.68% fee. Now, I know some of you are thinking, but what about price appreciation? Well, check this out. This fund is pretty new, launching in January 30th, 2024. But since inception, QQQI, including dividends, is up 16.43%, and QQQ is up 16.41%. Year to date, QQQ is down 1.47%, while QQQ is down 0.56%. And during August correction with the yen carry trade, the QQQI dropped 10.76%, while the QQQ fell 13.64%. So yes, you get some downside protection for those scary times and some appreciation to fight inflation and erosion. But let's compare it to the QQQ alone. If you put $10,000 into the QQQ, you'd have growth but no income. But with QQQI, that same $10,000 would have paid you $1,400 in distribution last year. Cash in your pocket while keeping pace with the market. So, how does this fit in real life? Picture this. You've got $100,000 to invest, drop $50,000 QQQI, and you're looking at $7,000 a year or $583 a month. Pair that with a growth ETF and some individual stocks, and you've got income plus upside. And that's my dividend machine in action. Now, it's not all sunshine. If the markets tank hard, those options premium might shrink, and the NAV could dip. But that's where NEO's active management shines. They're not locked into bad trades. Think about this and what it means for your portfolio. You're getting 14% annual yield paid monthly, tax efficient income, downside protection, with some upside potential to kick inflation's butt, active management by options expert, flexibility and dexterity, in what management can accomplish. This literally is the perfect combination for anybody looking for a reliable income without crazy risks. But let me be clear, this isn't some get rich scheme. This is a serious investment strategy for people who want steady, reliable income, the same income helping thousands of investors sleep better at night. And while nothing is a sure bet and anything can happen tomorrow, I personally do hold this ETF and I'm pretty confident in the management's capabilities, but don't put all your eggs in one basket. Guys, if you found value in this video, absolutely destroy the like button and let me know in the comments if you want more breakdowns like this. Or if you hold QQQI, tell me your monthly hold. Also, hit the subscribe and that notification bell because next time I'm showing you how I stack these ETFs like QQQI and my option strategy for an unstoppable income machine. Here's a teaser that involves a little known ETF yielding around 16% with a twist I bet you've never heard of called SVOL. And here's a challenge. Go and calculate how much monthly income $25,000 in QQQI could give you. Hint, it's over $290 and that's tax efficient. Remember, investing isn't about gambling, it's about building reliable income streams that let you sleep well at night. QQQI is doing that for thousands of us. See you in the next video.